to get this rolling. So we'll introduce Helmut Twiddison. He's actually our business representative that owns a business in the area, so he wants to share some things, and we'll just go down the list. And if you have any questions, just hold them until after we complete our panel introductions, and then we'll keep it moving, all right? So thank you so much.
Good morning. So what am I doing here? Answer questions?
Well, just share something about your business, what you've done.
Yeah, right now what I do is I have a business called Bayside Pest Control, but in reality I'm a serial entrepreneur. I look for opportunities out there, niches, and I start them up. My first job being with the Sacramento Bee when I was 8 years old. I had to kind of fib because you had to be 10 years old. And from there you just kind of get this mode set. But more than anything else, when starting a business is this business a career change? Is this a hobby or whatever? And I've always been very successful in, I've worked for other people, but at the same time, create my own business, start up small so you're not risking everything. It's not to say that someone at my age these days, I get laid off from somewhere, it could be very difficult, and sometimes you do have to start all over again. So that being said, really think this out well, and is this something I really want to do? You have to have the passion to do it. If it's just a job, it's not going to work. You may as well do somebody else. And it takes a lot of time, it takes a lot of energy. You probably work harder than you would if you work for somebody else. But the reward is you control your own destiny. Your greatest risk is not taking that risk and work for someone else who can say someday, you know what, you just don't fit into our plans anymore. Here's a gold watch, maybe, and you're on your way. So.
Hi, good morning. My name is Sandy Makovich. I'm the Director of Outreach and Business Development for TMC Working Solutions, and we are a microlender and business coaching provider. We like to say that the biggest service that we offer is business coaching and mentoring throughout the term of your loan, and then we also offer microloans, which is secondary, because we find that the greatest pathway to success for our small business owners is that they have access to resources and they have someone to go to for questions or a mentor to check in with to work on a special project. So that's a major component of our microlending program. We lend amounts from $5,000 up to $50,000. For new businesses, we lend, you're eligible for up to $25,000. For businesses over 2 years in business, you can apply for up to $50,000. And we do standard term loans, fully amortized, so it's the same monthly payment for the term of the loan, up to 5 years, and then it's paid in full. And the business coaching and mentoring is free, it's part of our service. And we serve all 9 Bay Area counties, so wherever your business resides, if it's within the 9 Bay Area counties, we can help you. And we have services in Spanish and Cantonese as well, if that's needed. Thank you.
Good morning. Michelle Otoya. I'm with Valley Economic Development Center, and I'm the Northern States representative. VEDC is the largest non-profit direct lender in California. We lend about $35 million a year to small businesses. We do startups. We have the SBA Advantage up to $250,000 for our startup businesses. And otherwise, we have our own funds. Those funds come mainly from larger money center banks like Wells Fargo, Chase, Citi, that gives us millions of dollars every year to do the smaller loans. With our own funds, we do loans between $100,000 and $750,000. Our sweet spot is around $350,000. We do startups, and depending on the strength of the startup, since there is usually no cash flow, we may use the SBA guarantee on the 7A Advantage, or if it's well capitalized, then we can use our own funds also.
Hi, my name is Jenny Casson. I'm with Katovich and Casson Law Group, but we also have a consulting business called Cutting Edge Capital. And one of the main things we do, our law firm is a full-service law firm for small business and nonprofits and co-ops. We do whatever you need if you do need a lawyer. But what Cutting Edge Capital does is we actually help our clients raise capital from their communities. A lot of times when small businesses are thinking about raising money for their business, They think they need to go to a bank, or they need to go to their credit card, or they need to go to maybe a wealthy investor, because that's kind of the path that you're taught a lot of times when you go to these kinds of events. But it is actually possible to raise money from a larger group of small investors. The reason that we're so interested in doing this kind of work is doing that kind of capital raising is very legally complicated, to be honest with you. There's a lot of laws to protect investors. So if I were to say to you right now, hey, I'm raising money for my business, please invest, I've just broken the law. But, but we help people navigate those laws and do it legally. We actually have a few businesses right now raising money from the public. They can actually advertise the offering on their website. They can offer stock, they can offer debt, they can offer all kinds of creative instruments. We have one business right now that's offering revenue sharing. So they just pay a percentage of their revenue every year, whatever that is. So we really try to help people be as creative as possible about raising capital, because we feel like a lot of the ways of raising capital that people talk about at these kinds of events are a bit limited and very hard to get.
Hi everybody, my name is Jeff Cohn, and I have an accounting practice that specializes in small businesses. And essentially what I do is help people stay organized and make sure that their record keeping is under control. There's a record keeping part, and there's also the financial analysis part to make sure that the business owner understands the numbers of their business. What I see oftentimes is if there isn't a structure in place, the business owners will often remember sort of the more memorable parts of their business, but forget about other parts that are happening. So my job is to engage the business owner, make sure they understand the numbers, and keep the records in order. And I'm located in downtown Berkeley. The thought I had when I read this was startup businesses, and that startup means different things to different people. And what I'm really talking about is not of course, the Bill Gates $50 million startup, but it's essentially business owners that don't have an accounting department, or maybe they have someone part-time that might be helping them out a little bit. But essentially where the business owner is now responsible for keeping track of what's going on with their business. And that's what I do, is help them.
Hi, good morning everybody. My name is Jeff Butler, and I'm the other Jeff on the panel here. And I am the Women's Business Center Director and Business Program Director for New America Community Corporation. And we are a 501c3 nonprofit. We're located in Berkeley. After the event today, if you don't have time for us to talk during the event, you can go 3 blocks down the street and we can talk some more. In all seriousness, our main office is in downtown Berkeley. What we do is help people start and grow small businesses, particularly micro enterprises. That means people that start out with 5 employees or less, often just by themselves. And we have a 3-year comprehensive program. And what that in a nutshell means is that we start out with a series of training classes on the fundamentals of business and business planning, and we help you to write your business plan. We really stress a written business plan for a lot of reasons, to help you think through what you want to do and how to do it, to test it out on paper before you try to do it on real life. It's a lot less expensive to do it that way. And then once you have your business plan together, the rest of the 3 years, if you will, is primarily, it has a lot of different parts to it, but it's primarily about working with you one-on-one with counseling and connecting you with other resources, financial and/or more training if that's appropriate, and/or other types of consultation or what have you, to help you put that plan into action, so to start and to grow your own business. And the reason that we have a 3-year program that's not classes for 3 years, because that would be way, way too much. It's just not necessary either. But we've found over time that starting and growing your business and making sure that it's on a successful path for the long term is a long-term proposition. And so it's not just 10 weeks or 15 weeks of training. Even if you write a good business plan, then you're off and set. A lot of times there are bumps in the road, and that's just normal, and so on and so forth. There's also opportunities that you didn't count on, and things that you can take advantage of that you didn't expect. There's all kinds of stuff that happens. And a lot of that takes time to make sure that you're on a good path to be successful long term, and we want to make sure that happens. So that's why we are around to help you for the long term, and if you're interested in the program, I can tell you more about that, and also be happy to just talk about starting and growing a small business in general. Thanks so much.
Good morning. Well, I'm Michelle Day. I'm a CPA with a tax practice and do financial coaching, as well as being a business advisor at the Small Business Development Center in Contra Costa. There's also, just so you know, a Small Business Development Center here in Oakland. And Oakland serves those businesses who are here in Alameda County. Contra Costa, very surprisingly, helps those in Contra Costa County. We've been around a long time. We are supported and funded by the Small Business Administration. A lot of our funding also comes from counties and cities. So what that means is, as we are looking to support and help people in business, small business, by the way, that's the SBA definition of small business, which is a whole lot bigger than you might think. Manufacturing businesses, we go up to 1,500 employees. However, most of the businesses that we work with, of course, are much smaller, startups, smaller businesses. We work with brick and mortar businesses, we work with those who are service businesses, we work with startups. Basically, we're there to serve the small business community. And by the way, our services, for the most part, are totally free to you, which is important for you to know. We offer a variety of things. We have a capital infusion initiative. What that's about is, how do we help small business people get funding? That's one of the most important things that we do. And while we do not lend, it is up to us to be in contact with the traditional lenders, the alternative lenders. How can we help you to get yourself positioned in a way such that when you do go out and look for capital, that you will have the best opportunity to be successful? And by the way, one of those pieces has to do with how much do you need? And so one of the things that we do, in addition to workshops that we put on we have a wonderful one that's First Steps to Successful Business Ventures, a really, really good one to help those who are just starting, or they're kind of deciding whether they're going to go into small business or not. It's kind of a really good reality check, like both Jeffs here have mentioned, among others, that this is a long-term proposition when you go into business. So let's help you get some of those things laid out first. We also have workshops about capital infusion, accessing capital. We have business planning workshops. We have other workshops such as a 10-week course that also helps people to get their business plan written, which among other things helps you to see, is this really feasible? Does this make sense in my life? And how am I going to make this happen? So we're there for you. We have a lot of resources, marketing, expertise, we have website audit resources, all different areas of business, and we're there to help you. So we look forward to seeing you. And we are hosted by the Workforce Development Board of Contra Costa County. Right, Coach?
Yeah, great partnership too. Thank you.
Yes.
Thank you all our panelists. Let's give them a hand of
And Startup America Partnership. And it's about resources, and there's local chapters throughout the United States. One of the things that they're working on is to lower the threshold of the SEC for getting funds for small business online. One company that I saw was called Early Shares, and it's equity-based crowdfunding, essentially. Could you individually comment on that? Anybody who has anything to say about your thoughts on that?
I'm really glad you brought that up. I actually worked on that legislation myself. There's something called the Jobs Act, which was passed on April 5th. It was signed by the President on April 5th, and one part of the Jobs Act is called the Crowdfunding Act. And that actually is a really exciting thing because it will allow people to raise money from the public and not have to deal with the high level of regulation that we currently have to deal with for doing that. It hasn't gone into effect yet. It will be going into effect probably early next year, There are unfortunately a lot of restrictions on how you'll be able to do that. For example, if you're raising over $100,000, you will have to have reviewed financials. If you're raising over $500,000, you'll have to have audited financials. Also, you will have to go through an intermediary of some kind. You won't be able to actually do the offering yourself. Under the laws that we use, you can do the offering yourself. So yes, that is something that's going into effect. And if you want to, there's not a lot of information out there about it, but on my website, cuttingedgecapital.com, we do summarize what that law will do, and we do post updates from time to time about the rulemaking process that's happening right now on that.
In the state of California, they just, the Secretary of State just put up a new criteria for investing with small businesses and nonprofits. Can you explain on that a little bit? It's like a 50, instead of a 504, it's a new category, but you're allowed to, and any one of you that know, you're allowed to sell shares to the public. So I was wondering if anyone had that information.
I'm not sure what you're referring to exactly. It might be a post about this new law that's going into effect next year. And I think it is important for people to know that there are ways under the current law to sell shares or to sell, bonds or notes or whatever you want to sell. There are ways to do that now to the public, but you do just have to be really careful and make sure you understand the law before you start doing that.
He's busy. He's busy.
I actually just want to comment on her question. I think, if I'm correct, she's referring to a new type of corporation where it's both a nonprofit as well as I'm not sure.
The benefit corporation.
Is that what you were referring to?
Yes, exactly.
I've heard that as
You're
well.
spot on.
When I heard about it, it wasn't quite ready yet. So I'm kind of curious about that as well.
Since you're asking all these legal questions,
Yeah.
I don't want to dominate this, but yeah, the benefit corporation. The benefit corporation went into effect on January 1st. There's also another one that went into effect on January 1st called Flexible Purpose Corporation. And that has nothing to do with how you can raise money. It's actually just a new form that you can use in California that is especially designed for businesses that are mission driven. So that if you want to make sure that you make it really clear to the public that you're about more than just making profit for your investors, that you want to do something good for the world, it's a way that you can form to make that really clear to your investors and to the public. It's not, it doesn't have any characteristics of a nonprofit. It doesn't get any of the benefits that nonprofits get, like tax exempt status or ability to receive tax deductible donations, but it is an interesting new form. And there is a website, I think it's called bcorporation.net, that talks more about the benefit corporation, and then the flexible purpose corporation is similar, and there's not as much information out there about that one, but they're two similar new forms in California.
Home care aid agency. Do all the services that you offer apply to nonprofits who are thinking of starting a business as well?
We don't do as much for nonprofits, but that doesn't mean we can't help you with working on a business plan and then help getting you to resources that can assist you. Because if you are looking at starting a business, now you have a whole different program going, tax-wise and otherwise.
In my bubble until I've broken the law when I've asked my cousins and relatives to give me money. And I guess you won't go to jail unless the IRS finds out you've been doing that.
Exactly.
Well, what can happen is if you sell, if you raise money without complying with state and federal securities law, there can be some negative consequences. Usually, what ends up happening is if all your investors are happy and nothing goes wrong, you can probably not worry about getting in trouble. But if your investors are not happy, they don't get what they expected, it is always possible that they could report you to the securities regulator. So it is a really good idea to educate yourself a bit about how you can raise money legally.
So I have a general question to Michelle. The services that the Contra Costa Small Businesses Development provides, and I'm in Alameda County, do the services you provide cover the areas that are addressed by Jenny's company and Jeff's company, which is accounting services, legal services? What do you cover in terms of those two areas?
Okay, and I probably will be speaking as well for the Alameda County SBDC because we are the educational arm of the SBA. The answer to your question is yes and no. Okay. The yes part being, yes, certainly we help people with knowing about accounting, getting your books set up correctly, which, oh, by the way, as a CPA, please, that's the most important thing you do. Be sure to get it set up correctly in the first place. Much less expensive than trying to have somebody unravel them later. I'm going to guess Jeff's going to agree with me on that. So we do a lot of workshops on that. We have one-on-one consulting on that. As far as things when we start moving into the legal arena, you will hear us say, this is our understanding. However, we are not attorneys and we cannot advise on legal things. So we would encourage you to seek out legal advice that's appropriate for whatever your situation is.
So Jenny, does your company provide a price list of your services that you provide, legal services?
We do have a lot of free resources on our website that just gives a lot of background information on the legal issues surrounding raising capital. Also, there's a nonprofit that I co-founded called Sustainable Economies Law Center that also has a lot of free resources available, workshops and online resources. But in terms of our services, it's probably easier to just call us and we can talk about what you need and we can figure out what it'll take to help you do what you're trying to do.
New business starting out just a few months. In the mentoring and coaching, is there a possibility to partner with a more experienced company, either in the same field or within the same area, that could help support us as we move forward?
I would say generally yes. There are a number of ways that you could do that. If you happen to be in a program like ours, again, it's a long-term program, so we have folks that have been in business for 3 years or actually who are still around after 3 years, and you could probably partner with them. Another suggestion would be contacting a group like the SBDC because they work with a number of businesses in the area and they could probably connect you with a business that would be willing to mentor you if they are part of the SCORE program, for example, already, or even if they're not, if they just happen to know you. We've found over the course of time that there are a lot of businesses and entrepreneurs who want to share their experience and give back, as it were, show people what it's really like and help them through, especially those first 2-3 years of business. So I would definitely say yes, it'd just be a matter of how you work it out.
I'm not sure, did you mention SCORE?
Yes.
Oh, okay, so that would be my other suggestion in addition to what Jeff mentioned, because you can be connected to someone who owned the same type of business or in that same industry. And SCORE is part of the SBA. Does everybody know what SCORE is?
No.
Oh, SCORE is, it used to be Service Corps retired executives, but it's now non-retired executives. And these are people in specific industries that are volunteers in SCORE to offer advice, help you write your business plan, help you look at projections, help you plan for growth. Once you're involved in your business and you need a check-in on something that's come up throughout the life of your business, they'll work with you on that. And what you do is you call the SCORE office. They're part of SBA, so it's a free service. And tell them what type of business you want to start. And they'll connect you with a consultant who's been in that industry, who's an executive, a tenured individual in that industry. And you get a lot of great hands-on, one-on-one coaching. And really, quite honestly, we refer a lot, our organization, to SCORE because we require a pretty in-depth business plan for our micro-lending program. And I hear nothing but great things back, so that's it.
Sandy, you just said something especially important. One of the things that I'm hearing from the lenders I'm speaking with, by the way, is that if a business or a small business has some kind of relationship, has been working with SCORE or the SBDCs, that tends to be kind of a favorable point in the person's favor, because they know you've been working with mentors, with people who are really serious about helping you with your business, and that does tend to look favorably on you. So that is a really important thing. Thank you for mentioning that, Sandy.
Okay, thank you. Yes, I actually, as far as, first answer your last question, low income, 64% of our clients are low income individuals. Our credit criteria for startup businesses is definitely a solid business plan, and to Michelle's point, we do, it helps if you've tapped into one of those resources. It just helps you personally, but we also see that you're very serious about that. So we rely heavily on the business plan. We want to see that you've invested in your new business, since we're going to invest in it along with you. And we really, if you're a new business, we look for about 20%. But we take equity investment in different ways than other places do, because we're a nonprofit and we do what's considered high-risk loans. If you say you're going to open up a bakery or something and you spent a year testing recipes, save all those receipts, because we consider that equity in your business. Or if you take a class or something on baking, save that receipt. As long as it's paid in full, we'll consider that equity. So I always tell someone, as you're going through your research and development, throw all your receipts in a box and we'll look at it as equity. And some of the other micro lenders are different, but they're a little more flexible. So business plan, equity, experience in the industry, and kind of across the board, whether you go to a traditional financial resource or another one of our community partner micro lenders, they're going to want to see that you have experience in that industry. And as far as credit goes, we don't have a minimum FICO score, but we do want to make sure that you're able to manage your credit. Obviously, before we add more debt to it. And just so you know, if you've got multiple partners in your business, everybody has to qualify, anyone over 20%. And again, that's another sort of blanket standard rule wherever you go. Everybody has their different credit criteria. They might have a FICO score requirement or what have you, but every owner over 20% will require that. So again, we don't have a FICO score requirement. We find people that are in the 500s, but they've been able to come back from whatever issue they had, or if they were honestly, falling behind on their credit cards, they've gotten on a payment plan and it's been worked it out. The last thing, the last credit criteria for us is just an alternate source of repayment. This is for new businesses, not for existing businesses over 2 years. That alternate source of repayment is pretty critical, we think, as far as helping small business owners succeed, because if you can have a means of covering your personal expenses and keep, your rent and your car payment covered for at least a few months until you can start paying yourself from the business, it obviously minimizes our risk, right? But it also just mentally and emotionally, it keeps you kind of focused on all that you need to do to get that business up and running. So there's, that the reason for that alternate source of income for us is twofold. But it can come in any form. Second, if you work a part-time job, if your new business allows, or you have a partner or spouse or roommate, parent that can help, or you have saved a few months in savings, what have you, we'll work with you on what that second source of repayment is.
Okay, and also the Valley EDC about what they also offer.
Yeah, pretty much we look at the deals the same way that, especially in the microloan. We do have a microloan department in Fort Southern, California. Here in the Bay Area, we work with Opportunity Fund on any transaction that's less than $100,000. When we look at a transaction above $100,000, especially for a startup, we go on SBA since we have the guarantee, and we look at trying to have a capital investment of at least 20 to 30% in the new venture. We look at the same criteria as also of a secondary source of repayment. Since there is no cash flow, usually that is why we go with the SBA, because we take a little more risk than a business that is already established and has a history of revenue. Also, I wanted to let you know that we do, at VDC, we do fund non-profits with our own fund. That's the VDC fund. We cannot go SBA on non-profit, but if you do have a startup non-profit or an ongoing non-profit, we will look at it and we'll be glad to fund those type of ventures.
Could I? Oh, yeah, I'll pass it down to Jeff to he has the final point. But I wanted to add one more thing. There's a gentleman sitting in the back there. I'm going to call him out. His name is Zachary. He's with Youth Business America, and they are the closest, similar as far as the nonprofit microlenders in the Bay Area. They're the closest. Our programs are very similar as far as the business coaching and staying in touch and very hands-on after we provide the loan. The difference is that they focus on young entrepreneurs, so under 35 years, and new young entrepreneurs, and they will lend up to $50,000 for new businesses. So if you meet that criteria, you must be.
Thanks, Sandy.
This is what Sandy's not saying.
I just had a quick general comment. A lot of times, we work with a lot of low-income folks and folks who have credit issues and so on and so forth like that. And just one thing to generally consider, a lot of times people think, okay, I need X amount of money to start my business, so how am I going to get that? And a lot of times you can kind of turn it around and think, okay, rather than, to use the bakery example, rather than how am I going to get X thousands of dollars to start a bakery, well, maybe what I do is I start by selling muffins at the market, and I don't need very much money for that, and I don't need to have sterling credit necessarily to get a $1,000 or $2,000 credit builder loan that I can stair-step up over time from there. So sometimes it's a question of not only the actual financing opportunities available and my financial situation at the moment, but kind of the long-term strategy of how you implement your business. And so basically, a lot of times, even if you are low income or have credit issues or what have you, there's ways to get to where you want to be. It just might take a little longer and more steps, but you can get there.
Information is there, but my phone number and my email.
In the wake of the financial crisis, what is a new challenge that you all have seen in your clients in these recent years? And what is one suggestion or way that you'd like to see maybe policy change or actions of financial institutions change to address that challenge?
Well, you talked about the financial crisis, and of course, that this is not going to sound very profound, but people do have situations with their credit issues, in the past, and houses being upside down. So I think the lending environment is a little bit different. The good news is that we do have the alternative lenders, that a couple of whom we have here. We're all trying to work together to see what can we do to help get the money out to the people that are going to create the businesses, that create the jobs, that help make everybody stronger. I don't know if that answers your question, but that's certainly something that we see an awful lot.
Can I make a quick comment? Yeah, I think there is a real need for some policy changes. I think, there was a lot of talk about moving your money, and if you really look at where our money goes, we don't have a lot of options, and it goes back to these securities laws I was mentioning. Because it is so complicated and highly regulated for a small business to solicit investment from their own community, they often are required to go to a bank or to a wealthy investor, or they just can't get investment at all. Whereas from the investor's perspective, what choices do we have? Unless we're a wealthy investor, we can really only put our retirement money or any extra money we have lying around into a bank or maybe into a mutual fund on Wall Street. So much of our money is flying right out of our community, and it's not working for us here in our community. So I think that's a really important issue. And there's an organization called Business Alliance for Local Living Economies. That's a membership organization that works on that issue. It talks about keeping our money local. And there is a local chapter of Business Alliance for Local Living Economies called Sustainable Business Alliance that I happen to be on the board of. And I suggest you all, get involved with that organization, especially if you're based in the East Bay. There's a lot of really great resources and events for small businesses. And we also have something called the Oakland Grown Card, which is trying to keep our money local in Oakland, and we're going to be working on building that up to have even more features. So definitely, let's work on some policy changes to make it easier for us to keep our money in our own communities instead of flying out and, doing fracking or doing coal mines or whatever.
I think one of the major impact has been on the equity on home ownership that traditionally has been used to capitalize the businesses, and as well for startups, as well as more mature businesses, that equity has disappeared, and most of the loans are short in collateral. So even if you have the cash flow, especially if you're looking for working capital, if there is no equipment that is involved, or the bank or the lender can take that collateral or part of that collateral, it has been very hurtful, the loss of value of the home ownership. So I think it has affected everybody, but more specifically small business owners that cannot collateralize their loans anymore.
I have a business partner that's very good at making good food. The thing is that since we're a new business, I have some equity. So I have like a food truck, catering truck. How do I leverage what I have? It's completely paid off. Brand new truck, basically 2006. How do I leverage the equipment that I have or things that I have in order to get loans maybe a little bit faster, or create a situation where I can get the most out of that? So if you got an answer for that, that'd be great.
Yeah, I think that the trade associations that they were talking about, they're out there to really help. And in this community, there's so many trade associations and everything else, you go crazy, find the one that's right for you. But yeah, talk to them. I mean, I know the Oakland Chamber now has a restaurant organization within the chamber itself. And I know with this food truck thing really taken off, I know there's an association for that as well.
In terms of value of the collateral, any lender would be looking at is on equipment and like trucks and machinery, maybe an advance rate of about 50%. So if you have a truck that is $80,000 that's still in good working condition, we may advance you about $40,000 on it.
And when you call, I would just ask the question up front, to whichever financial institution you call or micro lender, do they take the title of a truck as collateral? Because some will and some won't. And then, like Michelle said, talk to them about what the equipment you have and the age of it, because right away, certain things they'll chop off 80%, and its remarket value is 20% or 50%. So that's something have that information in the list and have a very upfront conversation with each one that you call.
Michelle mentioned that in the past, many startups have been financed, at least in part, by home equity in their homes, which of course is not wonderful as it was before the savings. Are the financial people on the panel finding that an increasing number of people are financing startups with retirement funds? And do you have any impression on how that can be a useful resource for startups?
Yeah, actually, that was an additional comment that I wanted to make, which, in the past, the traditional sources of capital for startups have been, I would say, threefold. First, friends and family. Second, home equity. and third, your retirement accounts. All three have been tapped. If you ask your friends and family, they're all hurting, so it's not as available as it was before. Your home equity has gone down, and most likely your 401k and your retirement and whatever, if you have any stocks and bonds, has also declined. So I would say that since 2008, it's been very difficult and very hurtful for any entrepreneur to have the capital. The capital is not as readily available. And in addition to that, the banks have been more reluctant. It's loosening up a little, but they've been, for the last 4 years, it's been a very difficult climate. And so getting the capital from any lender, and especially from any major bank for startups, has been pretty much nil.
And my question is more, if someone has retirement funds,
yes,
they expect to use.
Yes, you can use, and there is actually some SBA rules where that can be, you're not, if you withdraw early your IRA and your retirement, you're not taxed or penalized actually on that early.
Does that work?
Yeah, choosing the entity type that you want to be is obviously, there's a lot that goes into that decision. Being a sole proprietorship or doing it out of your revocable trust is absolutely fine. The reason, as you probably know, the main reason why people tend to want to form a corporation or possibly a limited liability company is it does create sort of a shield of liability protection for the owner. But you don't necessarily have to do that right away. If you have good insurance, you may be fine. So it's really, it's a trade-off. There is, in California, we have an $800 minimum tax for most entities. So even if you don't make any money at all, you still have to pay that $800 a year. So, but then again, that might be worth it for that liability protection. So it's kind of it's a difficult judgment call.
Yeah, I'm wondering if many of the businesses, startups, one of the areas that are oftentimes missed is the area of regulatory compliance. So whether you have a business like a bakery or a manufacturing operation, there's always the state and federal. For example, people think that, well, if I'm going to insure employees, I could buy workers' compensation insurance, but oftentimes government agencies like OSHA and also the health department would require certain compliance regulations. So what kind of resources are available for that?
I just want to say thank you for saying that, because I think every small business that's probably the biggest area of risk is when you hire your first employee. There are just so many laws governing employment, especially, there's federal laws, but California has even stronger and more strict laws, and there's just so many things that can be done incorrectly if you don't know what you're doing. There are tons of resources out there that are free, but just simple things like making sure to pay people minimum wage, giving them a break every 2 hours, making sure you have workers' comp. I have a lot of clients that say, oh, I have someone who's going to be volunteering for my business. Do not have volunteers. If you could have a volunteer professional, if someone's nice enough to volunteer as your accountant or your lawyer, that's probably okay. But if someone is doing more, day-to-day work in your business, don't have volunteers. Even if you're giving them some kind of equity in the business, you can really run into a lot of trouble. But does anyone here know of specific resources? I know, there's a lot of tons of resources out there on, California employment law. We have some on our website. We have a website for our law firm and a website for Cutting Edge Capital. And our law firm is k2-legal.com, and we have some blog posts on there about some really important employment law issues to be aware of. But I think if you just Google California employment law, you can find a ton of information. Another really good resource is NOLO Press. Nolo Press has a lot of really good resources that are quite cheap that you can download from their website. But just definitely make sure you're looking at California and federal, especially California, because California is stricter than federal when it comes to employment law.
And whether pass the microphone down the show here, also if you're either in Alameda or Contra Costa County, there is an organization called Employer Advisory Council. EDD puts together these meetings and they talk about a variety of different employment matters. And it's really useful work they do each month. I know in Concord they do it at the Concord Hilton, like 7:30 in the morning, but they cover a variety of different HR laws and information like that. And so it'd be a good resource for you if you're either Contra Costa or Alameda County. It's called the Employer Advisory Council.
A couple of different things. One is to address your question about compliance. As you're going into business, or even if you're into business already, there is a very helpful website that's www.calgold.gov, I believe it is. What that does is when you go in there, they ask, what kind of business are you in or going into? Where is it? I think that's it. And what comes out of that is a whole list of all different kinds of things that you need to look into, whether it's OSHA, whether it's employment law, whether it's what about certain certifications you need to have, what about the feds, what about EINs, what about California Franchise Tax Board, which I have to say something about, by the way, taxes. But that is a very useful, what about your city and business licenses? And the great thing about this website is it also gives you links to all of those different organizations or offices, which is incredibly helpful. So I can tell you as a CPA, having people come in and ask me about this before I knew of this website, there's just so many things you need to look at, and this is very, very helpful, so I suggest you might want to look at that. Another thing is, if you will, please, it's really, really important to get information before you get started. When I hear things like retirement, be very, very, very careful. Talk to your CPA. I'm almost begging you here as a CPA because it breaks my heart when people come in and say, you know, I filed for 3 years, or I did this, or I got this 1099, what do I do? And you know, that $50,000 that I took out of my IRA, I didn't know it was going to be taxable. What a surprise. This is not good news. So please, just go find out about it first. Other thing is, do find out about taxes. We kind of haven't talked about that too much, but one of the things that I find in the workshops that I give is that people going into business, particularly sole proprietors, and which is most of us, are surprised about self-employment taxes. Does everybody know about having to pay estimates and self-employment taxes? Please, it's critical. People don't know about that, and then it's a big surprise. And you don't want to be surprised at tax time. So much better to get information ahead of time, and the great news is there's a lot of information and resources, but be sure to ask the questions first. I'll stop there.
Address the tax issues and the accounting issues, and often what happens is they've been employees for years, and they've been getting a W-2, and everything's handed to them, their health insurance, and their withholding, and there's many great benefits to being an entrepreneur, but what comes with that is this additional responsibility of paying quarterly estimates and making sure that the health insurance is set up properly, and record keeping and timely payments of your biggest invoice, which is your tax bill. And what was I going to say? I've lost my train of thought.
Don't shy away from this.
How important it is.
Yeah.
Oh.
You might want to say something about working organization, the website, the
I had something else in mind.
I need her website again. www.calgold.
And I was given the 15-minute sign a little while ago, so probably pushing 10 minutes. And we have 1, 2, 3 questions, 4 questions already, so I'm going to keep it moving.
Just quickly to wrap up the tax thing, be very careful and very conscientious when you're using your personal credit cards to start your business. I know everybody does it, it's what happens, but given the IRS is really, from what I hear from some of our clients, CPAs, they're starting to get very strict. And if if you don't, show a definitive line between your personal expenses and your business expenses on these credit cards, it gets very gray and very blurry, and they won't let you write that off as a business expense. They'll just call it a hobby, and that's it. So, really, really, really do your best to separate. This credit card is only for personal, and this one's only for business. I do have a website for legal services for entrepreneurs. It's on our website. I told you there's a business resources page. But just to give it to you real quickly, then we'll get to the other questions. It's L as in Linda, CCR.com.
The sooner you can get a term life for a certain amount and have that foresight, the easier it will be down the line because your premiums will be lower. If you're applying for a term life at 60 years old because you're starting your business, it'll be very expensive. But most likely the lender is going to require that in order to give you the loan.
Any question, Maker?
But, we all know about the pre-publications that the government used to give away at Pueblo, Colorado, I guess, for some reason. But does anybody know anything about that or what the source of it is? And can it be used by the public in blogs or websites or documentaries? Or does anybody know anything about that?
I'll try.
I don't know that I'm exactly sure which publications, because there are hundreds of publications that the government puts together, as well as the state board. So I'm not exactly sure, but obviously if you're going to be referencing, or quoting something, you're always best off to say what your source is. I don't know if that helps you or not. Can you give me an idea of what kind of a publication you're talking about? And a lot of these are on the website again, which Jeff mentioned. If you go to www.irs.gov, there is just more information you'd ever want to know. And of course, if you're having trouble going to sleep at night, that can be a good place to go to. But
yeah, I guess what I meant was if it's a government organization, does it belong to the people? Or is it copyrighted? And do you know anything about the rights of the information provided by the government online?
okay, that would be probably for our attorney here. The other thing is, remember, if you're going to be quoting something, you can also have just a liability in what you say, not only if you're taking somebody else's information, but and sometimes too, I say is the IRS, for example, will have publications that they'll look at, but that's not actually the last word on what the law is. So if you quote that, totally, this is how it is, and you don't say where it's from, and somebody takes action on that, I don't know, it seems to me you could have a problem. I know as a CPA, you have to be just darn careful about what you say. And like I said, once again, the pubs out there with the IRS will say, this is how it is. But even the IRS says, that's not the final word, it might not really be how it is.
Jenny, quick.
I don't know about what you can use in terms of government publications. I assume those are available to be used by the public, but you did bring up a really good point, and that is that I know when we're working on our website sometimes, we'll just grab a picture off the internet and put it up on our website. I've done that myself, I have to admit.
And understand that there's 253 businesses represented at this event today. It's incredible. So often when we hear, whether it's in the TV news or the media, talk about business, the subtext is really, big corporations, as if they're the only lifeblood of our economy. But you know that collectively, you all are the largest employers. You're the largest employers, not only in California, but in all of the US. So it is your businesses that are really the lifeblood of our economy. And I just so appreciate the East Bay EDA and the other groups that came together for hosting this and pulling this event together to try to assist our small business community in all these issues, how to access financing, dealing with issues like workers' comp. I remember when my business was thriving, having the headaches of either because I provided benefits to my employees, having those health benefit bills go up and struggling with, did I pass that copay on to my employees? Things like my workers' comp bills, all those kind of things, and trying to meet payroll every month. So we know that those are the struggles that you struggle with each day, and we really appreciate that there's organizations and government agencies like the Small Business Administration there to try to assist our small business community. And we are so fortunate in the East Bay. I think you heard Elizabeth Eccles this morning, that our regional appointee to that Small Business Administration is a Oakland native, born and raised in the East Bay, and she's in that position to serve us, and it's wonderful. There are some legislation in the Assembly right now that are moving through the process their purpose is to assist small business, and I thought I would just highlight a couple of them. One of them would authorize California's iBank to enter into loan agreements to expand capital opportunities for small business. That's AB 2523. There's also a bill to ease loan guarantees for the purpose of stimulating small business, and that's from the Assembly Jobs Committee. It's AB 2671. There are two bills to make sure that the way the state develops regulations is less onerous to small business. And one of those is AB 1409 by Speaker John Perez, and the other SB 1099 by Senator Rod Wright. There's also a bill to facilitate local economic development and job creation by assisting small businesses to access new export markets. So I wanted to bring those to your attention because the legislature in many times and many members are attuned to the fact that you are the backbone of our economy. And we have only the month of August to get the final bills through the finish line, and then if they make it, they go on to the governor's desk. So those bills are in that process. Lastly, I just want to highlight that I was successful in doing a bill that was important to a lot of business owners, and that was my e-fairness legislation, which the governor signed and will go into effect next month, or rather in today's the 31st, so actually in September. And what that bill did was say to large internet retailers like Amazon and others, Overstock.com and a few others, that you have to play by the same rules, and that you have to collect sales tax just like the rest of us. Because you're not collecting sales tax, in effect, is giving an unfair competitive advantage to your business, meaning Amazon, over ours. And the fact is that any of us who bought products on things like Amazon, we owed that sales tax to California, but we didn't necessarily realize it. So it made us, as purchasers, inadvertent scofflaws. It also gave the perception that somehow you were buying this thing at a discount, which put you all at a disadvantage if you are to sell products. But additionally, it's very inefficient for the state to have to go after each individual to collect sales tax. It's much easier to do it at the point of purchase. So in September, Amazon, Overstock, and the rest of those internet companies are going to have to start collecting sales tax, and we'll have a level playing field for our brick and mortar businesses. So I'm very proud of that, and I'm very proud of you. I look forward to assisting you. My staff, Treva Reed, is here, and she has some brochures if you ever need to contact our office, if we can ever be of any help. We're happy to, if you're trying to figure out how to bid for contracts, say for the state, not that we can get involved in a prejudicial way, but we can certainly inform you of different rules or opportunities and that sort of thing. So I'm very, very happy to join you this morning. Thanks to EDAB, and thank you all.
Mr. Administrator, thank you for joining us today. We know you high school yellow jacks in the room, so good to see all you guys. And we can talk about Berkeley a lot, so don't Berkeley a lot. Thank you very much. Love it. Okay, so we did have a startup group, and as we mentioned, we did have a pretty lively discussion. We ran to the last minute, actually. So it was really good. On our panel, we had Helmut Tudis. He's with Bayside Pest Control. Also, Sandy Makovich with Working Solutions, TMC. Also, Michael Attilia from the Valley Employment Corporation. Jeff Butler from A New America. Jeff Cohn from Accounting Services. And also Michelle Day from our Contra Costa County Small Development Center. So I just want to thank them again for their participation in the breakout. And some of the highlights that came from that breakout session, one discussion was really focused around business mentoring. And so the question was really about, as a new business, is it possible to partner up with more experienced business owners and what resources are available out there to support them? And so we did highlight that the Small Business Development Centers for both Alameda and Contra Costa County both provide consulting services to business at no cost, as well as SCORE, the Service Corps of Retired Executives, provides that more of the mentoring element where you can connect with someone that's already been successful. And it used to be Service Corps of Retired Executives. I just found out today that most of them are not necessarily retired, but still ongoing executives, but still are involved in helping to mentor newer business owners. So those are some resources that were highlighted in that session. We also talked about obtaining loans, some of the requirements, and how to finance your business and startups. You know, what the credit requirements were for a microloan and other areas. So we talked about, you know, it's not necessarily, in some cases, it's not credit score, but other factors that they consider nowadays. Another discussion we talked about was about health insurance. That came up a few times. Insurance on a variety of different levels, and really engaging conversation about the importance of having insurance. And not only insurance, but also another factor that came up was about tax. About even as an entrepreneur, a startup, a micro enterprise, wherever, that make sure you know about your taxes and have all that in order as you're launching your business. And let's see, the other part was legal. A lot of discussion about legal services for business. What are the requirements? We talked about some of the laws regarding business, HR laws, if you're going to begin expanding your business from a startup perspective, from a sole entrepreneur to expanding your business and hiring other people, what the requirements are for law, and it can have a big effect on your business itself. And so, again, we covered a lot of different areas in our breakout. Really good engagement. I know we'll be airing, part of it will be airing on CCTV, so you'll be able to catch that as well. I want to say thanks Stacey Flores from the Atlanta Chamber of Commerce for helping do these notes and keep this organized. So, thank you.
George, thank you for your comments, and thank you for everything you do in the East Bay market. We'd now like to go to the other side of the tunnel if we could and hear from our moderator from the Young Business Session Breakout. That's Rick Ulrich from Alameda County Small Business Development Center. Rick?
Good morning. I just want to start out by thanking all of you to take valuable time out of your days and your businesses to be here to try to connect or link with resources. And I hope each and every one of you were able to make a valuable connection while you were here. I want to thank all the panelists, and the panelists on the Young Group included Philip Milestone from Mod 4 LLP, a law firm here in Berkeley, Hank Levy from Hank Levy and Company CPAs, also here in Berkeley. We had Jack Opet, who's a counselor with SCORE, Alton Doe with OBDC Small Business Finance, Erwin Reeves with Mechanics Bank, Lowell Rice with Private Industry Council representing the workforce development boards in Oakland, Alameda County, Contra Costa County, and the Private Industry Council in Oakland. Our small business owner was Notice O'Shea from a Donation Pay, who did a great job in terms of kind of describing some of the things that they've been going through. And Anika, and I would butcher her name if I said the last name, so I'm not going to. But Tech Liminal, which is an unbelievably great technical resource for small business owners. In our session, we talked a lot about credit. One of the gems that I sort of took away from the discussion, in addition to the available resources, was just a discussion of risk. And in terms of when you go out and you look for a CPA or you look for a lawyer, to make sure that the risk profile of the person you're talking to really is in line and sync with your own risk profile. It'll make things a lot easier in terms of being able to understand things moving forward. A lot of the discussion was really built around resources. My hope is that this forum becomes institutionalized and is held every year moving forward. Because I think that, just as we had an hour and a half, we probably could have gone another hour. At the end of the discussion, it was a little bit like a feeding frenzy with everybody jumping on the resources. So I think it just shows the need. I mean, there are folks out there to help you, and you just have to reach out and try to find them. But forums like this are unbelievable in terms of just giving you an opportunity to connect with somebody and get a question answered. I asked the audience at the end for some suggestions in terms of how we could help them moving forward, things we should think about doing. I asked the same question up in Antioch at the first one and got some really interesting responses. And in this case, it really revolved, I would say, around two things. One was the finance aspect that we're all concerned with all the time. And one gentleman's suggestion or an outgrowth of a discussion was really to have a forum where you have not just 2 lenders on a panel or not just 8 lenders in a forum, but get all the lenders together and give folks that are looking for financing or trying to find out about financing or trying to figure out the roadmap to understand what they have to do to get financing for their business, give them an opportunity to meet and greet with those folks that can potentially help them. I thought that was a terrific suggestion. The second thing was that there was a real need for folks of like-minded industries and businesses to network together. Whether there's somebody in the healthcare industry or software, there were 2 folks that specifically mentioned this in our area. We talked about groups, sort of affinity groups that might be available in the different counties and how to link into them or try to find those groups. But there was a real interest in terms of publicizing, if you will, meetups or different types of group of like-minded industry professionals that could discuss and work on problems together. So I thought that was a terrific suggestion from the audience. In general, I just, again, want to thank you all for being here, and I really appreciate the opportunity to participate. Thank you.